Chicago Fed President Austan Goolsbee joins us now exclusively here on CNBC. Austin, you heard the data, and I don't need you to comment on the details of the data, unless, of course, you want to. But everything looks like it's doing a little better. You know, the desert island indicator, jobless claims, it just really fails to go up. And maybe it's green going to yellow, but it's just barely so. What's your take on this data?
I mean, I thought two things. One, I gotta get Rick over to the bank and take him to lunch. We're both here. It's been a while since I've seen him.
You still owe me lunch.
Look,
Joe,
the thing about
later,
the
okay?
job market, the thing about the job market, Steve, is. Look, we were really going to go back into this, the money you owe me and the meals you owe me, but now you can't pay me because the ethics rules forbid it. But one of these days, Joe, I'm getting over there.
I would like to go with you now with the new Austin. I would. I love you now. I don't know what happened. Someone dropped you on your head or something.
So look, here's the thing about the data. On the job market, it feels to me like we get continuous months that emphasize we're a pretty steady, stable, full employment kind of circumstance. Middle of last year, when things were getting worse, cooling at a steady pace, you could make the argument that most of the time when the unemployment rate rises, let's say 1 full percentage point over a year, that's usually an indicator of something of the business cycle, and it's going to get worse. But what we've seen in the last year is stable full employment. And nothing has changed with the UI claims or with the broader measures of the job market, in my mind, that have bumped me off that view.
What about inflation when it comes to the concern that some have that tariffs will raise inflation, but it didn't show up in the May numbers? Do you think it's coming?
I don't. That's the big question mark. I mean, I think the most important thing to figure out is the through line of where are we going. And I said before April 2nd, on dual mandate grounds, we were doing pretty well. Stable, full employment. And I felt inflation coming down in the mid-twos and coming down toward the 2% target. And in a circumstance where that's prevailing, I believe that the rates will go down a fair bit more from where they are today. And you can see that in the dot plot. If you look at what the members of the committee, where they think the settling point is, there's pretty wide agreement. It's well below where we are today. The tariffs and other uncertainties in the economy threw a bunch of dust in the air. So I do think it's important that we get clarity, A, that there's not going to be an increase in inflation, or B, if there is going to be an increase in inflation, that it's not going to be a lasting increase in inflation, that it is, in fact, going to be transitory. Now, like you say, Steve, we've had 3 but 9 months of inflation readings. And for a month and a half of that, we had the beginnings of tariffs. So if tariffs stay in their lane, which is to say imported goods are only 11% of GDP. So if people don't freak out and change their behavior, and if we don't get a lot of retaliation from other countries, and if we don't jack up the rates on raising the cost of domestic production, then my hope would be that we don't see the inflation. But we got to get a few months of clarity before I'm ready to say that they didn't have an impact.
When you say a few months of clarity, that sounds like it would be difficult for the data to meet that criteria as soon as next month.
I don't know. You know, I don't like tying our hands or restricting our actions before we've gotten all the information we can. And you've been to the room where the FOMC meeting takes place. It's literally the biggest table I've ever seen in my life. So everything is always on that table. It fits on that table. But we still have tariffs coming. July 9th, we're going to get another announcement. We've got the China deadline. So just on the tariff part, we still have uncertainties. and we've got to see how many of these others play out, whether it's oil prices and geopolitics or what's happening with productivity. So I'm optimistic that we've been getting good readings, and maybe the impact of tariffs will be held just in their lane. But we want to be sure, and at moments where there's lots of uncertainty, as I say, you just got to get some of the dirt out of the air.
Hey, Austin, politics always kind of looms around what's happening with the Fed. It's so important to the economy. It's so important to consumers. But this president has been particularly outspoken with this Fed chairman. Yesterday, he called the chairman stupid. It's been this ongoing barrage because he wants to see rates brought down. You're able to probably speak a little more freely because you're not the direct target of a lot of these attacks on what comes on this. But how do you think that changes things? How much pressure does it put on anybody to feel like they're not bowing to the political pressure that's coming?
Yeah, hopefully it has no effect. As you know, economists are basically unanimous on the importance that central banks be free from political interference when setting monetary policy. And the reason why economists are unanimous about that is if you just look at places where they do not have that, inflation is worse, growth is worse, unemployment is higher. I think it's a mistake if we're going to start messing with the political interference part. You can look at the minutes, and then eventually you'll be able to see word for word transcript what is on the minds of the Open Market Committee when we make the decision. It's not politics. It's not what people are saying outside. It's the economic conditions and the outlook that drive the decisions.
Hey, Austin, Mr. President, how surprised or I don't know, the recent inflation numbers, can you explain them to me? Is it oil that's been an offset or something? Or listening to Waller, it's hard to explain, but listening to Waller, I think he's always thought that it's a one-shot deal if it's not a trade war, and it's not the same as sort of a systemic inflationary pressure or something. I think he would have done it. He would have cut either way. But you think we're still getting some next month or the month after? It will get a bad effect from the tariffs, or is it possible it's just been something that we've just been fearful of, and you turn the lights on in the abyss and there's nothing there?
Well, that was 4 different questions, but I'm going to try to address them all.
Is it possible that there's nothing coming from tariffs or that it's offset?
It is possible. Like I say, tariffs are all imported goods is only 11% of GDP. So if it stays in its lane, it can have a modest impact. I'm a friend and fan of Governor Waller's. We get along very well. And I do think in a theoretical, he's right that a one-time tariff ought to be, in theory, a transitory inflation shock. But like I said, I gave a speech at the big auto symposium in January, which just went through the thing that everyone knows. That was literally the same logic at the time of COVID that said this is going to be transitory, right. Hit to the supply shock, inflation's going to go away. And inflation lasted a lot longer than people thought at the time. If there isn't inflation that comes from the tariffs, though, and if we want to explain the data, if you look at the data, the non-tariff affected or less tariff affected parts, like services, like housing, they've been particularly encouraging, and you've seen inflation coming down. If we can keep inflation in the range of 2%, so it's clear we're on this path back to target, then I think the uncertainties resolved. We're on a path to getting rates down, and I think we would go back to that path. At the time I said it, I said 12 to 18 months. Well, that was 3.5 months ago. So what is that, 8.5 to 15.5 months or so? But 14.5 months. I still think over a longer time frame, it's likely rates come down if we can get some resolution.